Hello and welcome to this session in which we will discuss the budgetary process. In the prior session, we looked at what is a budget and we looked at the roles that a budget plays. Now we are going to review those roles very briefly here, but it's very important that you go back to the prior session, make sure what's a budget, what are the critical functions that a budget serve a company. Now, we will discuss the budgetary process. How do we prepare a budget? Now let me go back and say this one more time. Without a budget, you don't know where you're going. And that's the easiest to get where you want to go. There's an adage that says, if you don't know where you're going, any path will take you there. What does that mean? It means if you're confused and lost, you would always get there. What does that mean? It means know where you want to go. And how do you know where you want to go? You plan, you create a budget, then you take actionable steps following the budget. But how does a budget start for a company? From the company's perspective, and by the way, if you don't know where you're going, it doesn't apply to corporation. It also applies to you as a person, because if you don't know where you're going, any path will take you there. If you first you want to know where you're going, plan for it. That's a personal advice. So for a company, they start with the mission statement, and we talked about the mission statement. This is the starting point. It's developed usually by upper management, the board, senior management. It included the organization purpose, for example, enhance customer experience by offering innovative software solutions. So this is the big picture, but we start from there. What does the company wants to achieve from a grand perspective? Then we create this budget, which is it's crucial for planning, and we talked about the planning aspect of a budget as well as performance evaluation. Besides its use as a motivational tool, control tool, goal congruence, resource allocation, so on and so forth. So the budget is a tool, that's the first thing we want to learn, that's going to serve what? Achieve what? Achieve the mission statement. But the mission statement is very broad. We start from there, then we drill down. So let's talk a little bit more in details about the budgeting process. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Hello everyone. Are you struggling with your CMA exam preparation? Do you feel that your review course is moving too fast, too brief, or not covering topics in depth? Well, if that's the case, at Farhat Lectures, we can help you. We build your confidence through in-depth explanation, not memorization or reading the slides. What we will do is we provide baby steps approach to break down complex topic so you can truly learn, understand the material. How do we do so? We offer video lectures, we offer practice MCQs, we offer true-false questions, we offer exercises, we offer the notes. Understanding the material is the first step in passing the exam. Once you understand the material, you have gained the confidence to pass, and you can pass with Farhat Lectures. What can you do now? Start your free trial. You have a 2-day free trial. Take a look at it. Give us a chance. Your risk is zero. You like it, you keep it. You don't like, you cancel. Give us a chance. We can help you pass the CMA exam. The budget details how the organization will achieve its mission with long-term objective and measurable goals. And this is basically, we discussed this in the prior session. But what we have in a budget is a key word is measurable goals. For example, we want to launch 3 new software products and expand market reach by 50% within 4 years. Now we're looking at measurable goals. Why measurable goals are important? Once we know what do we need to achieve, the next thing we need to do is allocate resources, prioritize resources. Why? Any company or any institution or any organization, even the government, don't have unlimited resources. We have limited resources. We have a limited amount of money, limited amount of material, limited amount of manpower, limited amount of direct labor. So we have to prioritize what do we need to do with these resources based on our measurable goals. That's why we need measurable goals. For example, deciding the number of development teams needed and the technology investment required to support launching the product. So we said we want to launch 3 new software products. Well, we need people, we need technology. Well, we need to prioritize our resources to those goals. Here we have what's called short-term objectives. They're directly derived from the organizational priorities. We know what priorities are to guide immediate action. For example, we need to develop a prototype for the first software product and conduct user testing within 6 months. This is the objective, short-term objective. We gave them the resources. Let's go ahead and do it in order to achieve our measurable goals, which is expanding the market by 50% within 4 years. Now, how do we create a budget? This is, again, a review of a budget. But what's the budget? There is what we call participatory budget process, or participating in the budget. The budget should involve all level of organization, because we all have to be aware of what needs to be done. This is part of the communication. Of course, we start with the mission statement. This is what's initiated by the board of directors, upper level management, CEO, CFO, but they may not put the details. What's going to happen? Senior management will break down the mission into actionable, measurable goals. I know I'm repeating the same thing differently, but by doing so, you can see the big picture. You can see the sequence. So we have now measurable goals created at the senior level. Then we create budget committees. This is a group of people, usually top management, to draft the budget calendar, because we need a calendar, we need deadlines. When are we completing this? We need to have a budget manual. How do we complete a budget? And to review and approve department budget. So every department now will create a budget, and we'll tell them how to create a budget. But we'll have a budget committee that will review those budget and check on them. They're acceptable. So here we have the role of budget director. This person oversees the compilation of the overall budget and manages the budget process. We have to have a person involved in charge of this process. So lower level and middle level management are involved in this process. They prepare their own budget and they submit them to the budget committee. Same thing as senior management will have their own budget and they will submit them for review. So we have the big picture, we have senior management creating a budget, we have a budget committee, we have lower level management also creating a budget, submitting those budgets for review. Now there are two ways to create a budget, either a top-down or a bottom-up budget, basically a theoretical perspective on how to prepare a budget. So it's a top-down versus a bottom-up. What's a top-down? Well, top-down means the upper level management create the budget and ask you to do the work. This approach is driven by senior leadership, which may result in limited acceptance. This is one the negative of imposed by upper management is people on the lower level, they might not like it too much. They may result in limited acceptance, because what you want people who are working on the front line to buy in, to accept these budgets. So this is a top-down approach. The top-down approach, the positive of it, it's consistent and simple. Why? Because once the top-down people tell you what needs to be done, it's uniform across all functional areas. It's less complex and less time consuming because you have few people on the top deciding, compared to when you gather input from all organization level. So that will be the bottom up approach. We're going to talk about that in a moment, where you start at the bottom and go upward. Bottom up approach. So this is the positive of a top down. It's consistent and simple. Also, what companies do sometimes, they hire an external consultant to do what? To prepare the budget for them. An external consultant, in case you see it on the CMA exam or any other exam, it's basically a top-down approach, because who hires those consultant? Management. So that's considered a top-down method because they are hired by level management. And these consultants may not have a deep insight into the company's operation, because outsiders, yes, they might be expert, but working for the company, having your own experience is totally different. People in the company knows more than anyone else, which can lead to budgets that do not fully align with internal processes when it's created by a consultant. And sometimes what consultants do, they might have a budget that's created for many other companies and they use a cookie cutter for everyone else. So just FYI. Now, employee responses. Employees who are not involved in the budget development may feel disconnected, or they might have limited acceptance, leading to potential resistance or decreased motivation. So this is the negative for a top-down approach. There's positives and there's negatives. So what is a bottom-up approach? The bottom-up approach is the exact opposite. Notice I flipped it. Now the people on the bottom, what we do, upper management will go and talk to the people on the bottom. Tell me about what you do. How much resources do you need? tell me about your process step by step. So general guidelines and expectations are set by general leadership, but you get the input, extensive input from middle and lower level management. Yes, you still set the guidelines, but you want the input. These levels contribute significantly to the budget creation, making sure that the budget reflects practical insights and operational guidelines rather than hiring a consultant. So what is the positive of this bottom-up approach? Bottom-up or participative budgeting is higher acceptance by lower level management. Why? Because they are going to buy in. They are committed. They're the one that when you involve lower level management, they are more motivated because they told you what needs to be done. In a sense, they committed to it. So the involvement of different management level increases the likelihood of the buy-in. You want them to buy in. You want them to accept this and result in more informed, effective business decision. Now, is there any disadvantages? Of course, for everything there are advantages and disadvantages. The disadvantage can be time consuming, and we touch upon that. And costly due to extensive input required. How many people are you going to ask? Are you going to ask, 30%, 40% of lower level management? And if you don't ask everyone, they may not be happy. And the quality of participation may also be influenced by the individual goals. Certain lower level management, they might they want to increase their goal, not the company's goal. They want to increase their budget. Their values are taken into account, their beliefs and the expectations of those involved. So that's the disadvantage. It's time consuming, costly, and it could lead to something we call budgetary slack. Now we need to know what's budgetary slack, and the budgetary slack is based on values, beliefs, and individual goals as well. So this is the negative, budgetary slack. So what is budgetary slack? Budgetary slack or padding the budget, also known as budgetary slack. This occurs when more resources are budgeted than necessary to achieve organizational goals. So simply put, what you're doing is you're creating a cushion. As a manager, let's assume you promised the company $800,000 in sales. That's your division. You promise them 800, but you know you can achieve $1 million. So what you do is you create a cushion of 200,000. So when you achieve $1 million, well, you look good. And when you said I can only achieve 800,000, and what you're doing is you are creating a slack, a budget, a cushion for you in case things go bad and then things don't materialize. You could lose up to 20% and still look good. But this is a budgetary slack. And the same thing is for expenses. For expenses, if you need 800,000 in expenses, you'll ask them for $1 million. You'd say, I need $1 million in operating expenses. So you underestimate revenues to look good at the end and overestimate expenses for two reasons. One is to enjoy, you have more resources. Two is to when they run variances, because eventually you're going to have to account for how you run your company. Are you spending too much money? Then you're not going to look good. So that's why you have to do what? You have to be aware of budgetary slack. Why? Because it's going to influence managers' behavior. So managers may negotiate for less stringent performance measures, less revenues, more expenses to avoid unfavorable variances. But what's that going to do? That's going to lead to inflated cost and conservative revenue projection. Rather than saying I can do $1 million, I would say I can do 800,000. So a department, if they need $80,000 in office supplies, they would ask for 100,000 to create a cushion for losses, inefficiencies, so they don't want to look bad at the end. A little bit more about budgetary slack. How can we decrease budgetary slacks? When we're doing the budget, we have to look at all variables. We have to evaluate all variables within that budget. Conduct a thorough budget review, allowing flexibility for necessary budget adjustments. So we have to create some flexibility, but we try to reduce those budgetary slacks. So managers expecting cuts may intentionally request higher amount to safeguard their budget, because in some companies, and I know where my wife works, usually in their department, it's either you use the money or if you don't use it, lose it. So you don't want to give the management this incentive. If you don't use it, you lose it. You want to have different motivation. Why? Because if the policy is use it or lose it, what managers would do will spend the money on anything, so next year you don't cut their budget. So to reduce those budgetary slack, you have to give the manager some flexibility, not use it or lose it. Maybe if you don't use it, it will be there available for you in case of emergencies. And what managers are worried about is performance. So when you judge your management based on budget, based on their budget performance, when the budget is a benchmark, well, what's going to happen? They want to create a budgetary slack because you're judging them, you're judging their performance based on that. And as a result, they're going to create the slack. So managers will set easily attainable goals, less revenues, more expenses to ensure favorable outcomes. So somehow you have to change your motivation and how you motivate and how you review their performance. Positives and negatives effect. Again, the negative effects, budgetary slack can undermine the accuracy and planning benefits of a budget, because the reason for a budget is to plan ahead. Now we are planning, but the numbers are not correct. This could lead to inefficient resource allocation. For example, a project budget may indicate the need of $750 in funding, while only $600 is genuinely required. So we might borrow $750,000. Well, in reality, we need $600,000. We increase our debt, we increase our interest expense. Why? Because the managers want to protect themselves. They think they need more than they should. This misrepresentation could mislead decision makers, which is we may not undertake the project. The positive impact of some slack is it provides a buffer for manage unexpected events or uncertainties, and this prevent underfunding initiatives. So sometimes what you do, you'd say, okay, this is what I think, but let me get some extra resources just in case something happen, or let me project $1 million, but I can do 1.4, but let me project $1 million because I don't know what could happen. The economy could go down and I could lose sales. Lack of slack. Without flexibility, managers may hesitant to launch a new initiative or delay necessary maintenance. So if you squeeze, you say no slack whatsoever, then managers becomes conservative. And as a result, you may lose certain opportunities. Why? Because they're not going to take new initiative because they want that extra flexibility in case something goes bad. So the company will have to somehow manage the slack. Otherwise, it may affect you negatively from that perspective. Due to perceived funding shortage, you feel there is not enough money, and as a result, you will not go for it. Let's take a look at this multiple choice question from farhatlectures.com. A bottom-up process is most likely result in which of the following? So we're looking at a bottom-up. So we're starting from the lower. We set the goals, but we let the lower level management kind of help us with the budget. If that's the case, what would it results in? High consistency across departments? No, it will not, because we're going to have different departments creating different budget. The top-down approach, each one gets basically the same. So A is out. Limited input from lower management. No, it's not limited input. It's more input. That's why bottom up, you're asking them for their initiative. Greater acceptance and motivation among employees. Yes, this is one of the benefits of bottom up budgeting. Is employees, they buy into the process. They are more motivated to achieve their objectives. But let's look at D. Reduce allocation for strategic objectives. Not necessary. That bottom up and doesn't in any way reduce resources allocation for strategic objectives, because the strategic objectives are set on the top and lower level management is helping us create actionable plans. So it doesn't do that. The answer is C. What should you do? You want to go to Farhat Lectures and look at additional multiple choice questions. That's going to help you. Whether you are studying for your CMA exam, accounting courses, CPA exam, invest in yourself.